I'm going to move on now to another relief that was enhanced in the budget, being the Enterprise Investment Scheme. Now, why is this important? Well, the Enterprise Investment Scheme really gives you many reliefs. It can give you relief against tax you've paid on something you've already done, which I'll talk about in a minute. It gives you a tax credit if you invest in the right type of company. And it also gives you tax exemption on the disposal of those shares in the right type of company, provided you have the right type of holding and you've held it for 3 years. To qualify, you have to subscribe for shares in a qualifying company. Now, if we look at the tax credit that you get when you make that investment, you have to subscribe for shares. That's the first thing. And the tax credit you get at the moment is you get a tax credit equal to 20% of the amount you pay on that subscription. So if you subscribe for £100,000 worth of shares, you get 20% tax relief. However, from the 6th of April, that tax credit is being increased to 30%. And so up to £500,000 worth of investment, you can get a tax credit equal to 30% of your investment from the 6th of April. Next year, 6th of April 2012, that limit of £500,000 is doubling to £1 million. So that's quite a generous relief. So you put £500,000 into a company and the government gives you £150,000 back from the 6th of April. However, there are conditions. And one of the conditions is that the company cannot be a connected person to you. It cannot be connected to you. And what that means is that you can't own more than 30% of the share capital of the company. If you do, you don't get the income tax credit. And also, if you qualify for the income tax credit, so you own less than 30%, you and your associates, your spouse, etc., can only own 30% together, combined, then after 3 years, if the company has been qualifying for that 3 years, and you sell those shares, they're exempt from capital gains tax. So in fact, earlier we put up 3 rates of capital gains tax, being 10%, 18% and 28%. There's actually a fourth, which is 0%, if your company, the shares you're selling, qualifies for EIS, Enterprise Investment Scheme. Now, I said earlier that there are a number of reliefs, and looking back, there's something called EIS deferral relief. And what this means is that if you've disposed of any asset in the last 3 years, it doesn't matter what asset it is, if it was charged with capital gains tax, and you may be about to pay the tax, or you have paid the tax already, then if you subscribe for shares in the EIS company, you can defer the payment of that tax until you dispose of the shares in the EIS company. And so it might be a second property that you disposed of and you paid tax on it. It could be any asset whatsoever, and you can defer that capital gain until you dispose of your new shares. And the amount you subscribe for shares has to be equal to the gain that you've made. So if you made a £100,000 gain on the second property, on which you've got no other relief, then you invest £100,000 in your EIS company, and you can defer that gain. EIS shares also qualify for something called share loss relief. And what this means is that if in fact your investment is not a good investment at the end of the day, so we're not too worried about the capital gains tax exemption, what we're worried about is the loss that we've made, then to the extent that you haven't got the income tax credit, that is a loss for tax purposes, and you can claim it against income. So currently, you've got 50% loss relief on those shares. So put that package together, and it's quite a good package for investment and for sheltering tax. I said earlier, it has to be the right type of company. So what is the right type of company? Well, it's got to be a trading company, or the holding company of a trading group, and it has to be carrying on the right type of trade. And what is the right type of trade? Well, it's a trade that is basically not asset-based, so you can't invest in nursing homes and anything that is asset-based, other than hotels. And it has to be a trade that isn't really for professional services. So you can't, if you're a lawyer, if you're an accountant, if you're carrying on those kind of services, then you can't use EIS relief. And the new test is, again, it's a relaxation. In the past, the company or the group had to be carrying on its trade wholly or mainly in the UK. Now, that has been changed to having a permanent establishment in the UK, which means that if you've got a company with a foreign branch, you can actually claim EIS relief now for that company, subscribe for shares in that company, whereas you couldn't previously. So what are the planning points for EIS? Well, it's an exit planning scheme. If you qualify for the income tax relief, then your EIS shares are a tax-sheltered product. They're tax-sheltered shares. And we can use this because if that company's been trading for 3 years, that company or EIS company can stop trading. It can do what it wants. You can turn it into a property investment company. You can do whatever you want with that company after the 3-year qualifying period, and your EIS shares will still be tax exempt. So one idea is that your EIS company could take over another company. And if this can be done on a tax-free share-for-share basis, then what you're doing, you're swapping your taxable shares for tax-free shares in your EIS company.